Chapter 24. Draw on your charts. Yahoo Finance gives you the invaluable ability to draw on stock charts. Using horizontal and diagonal lines, you can identify support and resistance levels. Support and resistance are psychological levels where buyers and sellers meet in the market. Stocks tend to bounce off or break through these price levels very quickly because investors recognize the significance of support and resistance price levels. Support and resistance naturally occur in stock charts and can help you decrease your trading risk by finding great buying and selling levels as previously defined by the market. Here is a basic example to summarize support and resistance levels. So we have a stock and it starts trending up and down, bouncing off of support, hitting a resistance, actually breaks through it to a second resistance, then comes back down to that original, breaks under there and goes down to a new support, then trends under a resistance a little bit and goes up to that original resistance. Really cool stuff. The more time a stock touches a support or resistance level, the stronger its perceived validity becomes. The quadruple top resistance showcased above is extremely strong, whereas the single support level at the bottom is less established by this data. Big movements must occur for a stock to break straight through a long-term resistance to turn it into a support. Similarly, supports turn into resistances when stocks tumble down below them. In the example above, the prices stumbled when first testing the historical support after its large downturn because the older support acted as an initial resistance that the market quickly broke through, jumping back up to the higher resistance level. You can use support and resistance levels to predict where a stock's price will reverse. To strengthen the security of a trade based on support and resistance price levels, you can set a stop loss reasonably outside of the support or resistance range to limit your losses if the stock breaks through a support that you purchase and keeps falling. Alternatively, if the stock bounces off a support and rallies up to a strong resistance, you can sell all or part of your position at the historic volatile price level. The same is true for short positions based on high prices near resistance levels. First, let's look at the support resistance example in a long-term trade. We'll look at Micron Technology Inc.'s long-term chart to find any obvious psychological price levels. We can draw on the chart by simply clicking Draw on Yahoo Finance's full-screen chart. And then it shows a chart, and we see a very, very long-term history of Micron Tech, and we see pretty solid, horizontal support level at around $36 that acted as kind of the base of a head and shoulders setup into 2000s, and we'll talk about later. And also was a pretty solid peak for a recent move and an early move in the 1990s. The early recent one was, I think, 2012, and now we see that again coming into play as a strong support resistance level as the price breaks through it very, very quickly. You can identify the single historical price level marked above by looking at the prices MU constantly bounces off of or has large market volatility around. We see MU bounce off this $37 price level in 1999, trend around it scarcely in 2001, bounce off it in 2015, and quickly break through it in 2017. Since the stock tends to bounce quickly off this price level, it is a support level when the stock is trending above it and a resistance when the stock trends below it. In either scenario, prices quickly move away from the psychological price which existed since the 1990s and likely exists for decades to come unless MU moves to a significantly higher price range and trading range. You can use support and resistance lines in any stock chart that covers any duration. The key is to look for tops, bottoms, and price volatility around the specific price levels. Candlesticks help you find your best support and resistance lines possible by revealing a period's high and low price. With this data, you can examine when a certain stock hits and bounces off a support or resistance. Here's one more swing trading stock example with Nike Inc. So with this chart example, we see a pretty solid bounce off of a top line resistance early on as the stock broke through a resistance support line earlier, and then a mid-level support resistance line that served as a top on a lot of the movements, and a contention point where the stock price kind of bounced off of it when it was coming back down. And then over time, this lower support resistance range was a big consolidation phase during the stock's movement in 2016, 2017. 2018, and once it broke out of that at the beginning of the year, it hit that new high upward wedge right out of there and it's gone up from there since it broke through that psychological price level. We see 3 price levels that were constant swing points for Nike because many buyers and sellers exchange at these price levels. You can profit in sideways markets by buying the lower support level and waiting for prices to rise up to resistance levels. Notice that Nike broke through both of its supports after a long consolidation at the end of this period. Because the stock had the momentum to create a new high, it soared as new buyers bought above the old resistance level. Try to identify support and resistance in your charting that can significantly influence price movements. Try to avoid overanalyzing a chart with too many lines, but always connect consecutive bottoms, tops, or consolidation phases that you think form obvious supports and resistances. Horizontal supports tend to be very enduring in both long-term and 9-to-noon trades. Let's look at another example of support and resistance in a 9-to-noon setup. We see, so TIK, and it had super big run-ups. These are daily candles, so you look at historically, it's had this consolidation at this price level around 385. And those have served as tops for a lot of the very, very quick 9-to-noon days where the price just spiked up a lot one day. And after that huge spike, it went back down the next day and closed. And then the days when it actually got above that price level, in December of 2018, after it got up to that price level and broke through it, it actually made an extremely high new high in a single day trading period after a pre-market gain that went up to a previous historic resistance level after the high that occurred in February of 2018. So really big, 2017. Slower, normal movements in TIK's price early in 2017 defined a historical $3.85 support and resistance level, and you can now use this price level as a basis for active trading. For 3 of the days above when TIK had a massive run-up in one trading morning, the price peaked at or very near this resistance level. In recent trading days, the stock used the 385 level as a support, now sitting at 515 during the pre-market, up 110% in the past 2 days. Daily candlesticks are useful in 9-to-noon trading because you can chart out historical support and resistance levels before you enter a trade so that you know what price levels will be difficult to break through, helping you set your buy and sell targets in the morning. In the most recent trading day, you could realize a near 30% gain by shorting TIK after the stock broke through the VWAP by covering at the 385 support level shown below. We'll explore VWAP and finding stocks that go from $2.50 to $6 in a day in chapters 33 and 36. And then we see the daily chart for for TIK, looking at like 1-minute candles. And in the morning, it spiked up a lot, but then it broke down and it hit that VWAP. And after it broke through the VWAP, it just reversed really quickly at that 550 level. And the market wouldn't take the prices. It crashed down through that VWAP. And if you look at a short off of a VWAP reversal crossover, that's where you would see the price start to plummet for the rest of the day, all the way down to that historic support level at 385, which you establish by looking at long-term trends. Upper trend line is the intraday VWAP coming in chapter 33. Notice that this intraday trade bottoms out at almost the exact long-term historical support level we identified earlier. Because of the history of the price level in TIK's past shown earlier, we can use the strong, valid 385 psychological price level as a profit target in our volatile 9-to-noon trade after we short the VWAP crossover. And also in that trade, if you look at the chart, in like the first 5 minutes, you have an opening morning VWAP crossover where the stock initially went down. And so if you shorted based off that, you'd be wrong in a temporary short-term reversal. But throughout the rest of the day, you get proven right because it is a very, very strong indicator. We'll get to that in chapter 33. Horizontal support and resistance price levels are extremely important psychological levels that dictate stock movement across all trading intervals once established. Use them